Hey everyone. Hey everyone, thanks for tuning in to another video. Today's Friday. I'm going to show you the last trade of the week that I took. This was a 24-hour trade with over 30-hour potential, 3 pips stop loss, Friday London session. Super interesting trade. Definitely a little bit complicated. Price action was messy, a little unclear, but at the end of the day, market structure will always show the best setups. I'm going to go ahead and break this down from the 4-hour to the 1 minute where I took my entry. You're going to see how you can get trades just like this if you're not already. You're going to understand more of my reaction-based trading approach and how I use the higher time frame story to build and get much cleaner setups. So let's get into it. To get started, here we are on the 4-hour time frame. I love using the 4-hour time frame. If you've already watched some of my other videos, you can already start to understand more of how I like to trade. But just to talk about this, once again, for this week, we're going to go over the last 1 month of what we've seen happening to go ahead and give us the idea of why what happened today happened, right? So for the last month, we've come down, we've tapped into a weekly demand zone. The weekly demand is pretty much this entire range. We're currently consolidating here on the 4-hour, so it's a little unclear. Price action has not yet given us whether we're going long or whether we're going short on the higher time frame to really break out of this range. So in this current time frame, all we're doing is we're trading within the range. Now it's easy to do that if you understand market structure, if you know what you're looking for setups. I only trade 3 hours a day, so there's always something happening on a smaller time on the lower time frames. So on the 4-hour, here we are. We had let's talk about this. I have some notes that I wanted to show you that might make it easier for you as we go along through this. So to get started, well, let's go from this point. At this point, this was a pullback that created a low, right? Price came back up, created the high. It's what do you call it? A lower high, right? Because this high is lower than that one. Then what do we get? A lower low. From here all the way down here, this is one massive leg. Not very clear. Wicks came to sweep. We didn't get any strong closes until pretty much down here, and then this is the actual low, the lower low or the lowest low. We have not yet come back to this zone yet. We're currently trading what is the flip zone from this lower low, right? So from here, what do we have? Price came up. Here we had a flip. If you don't already understand what flips are, I have other videos that kind of break this down on other trade recaps or some of my other how to trade videos. Here, this was a pretty important zone. We got a massive injection of momentum that created a breakout and a supply failure at this point that created this lower low from an expectation of having a, an expectation of continuing downward. We showed some bullish momentum here injected into the market, and it was very aggressive, very high momentum. We came back to, this would be the the previous high. This was the extreme low. We came back to what? From this flip zone, is the origin of a break or a sweep of structural liquidity, where we came to mitigate this higher time frame. So this is a liquidity point of interest that we want to look at, and that's why I have this the wick. I have a supply zone just drawn all the way out across because I'm waiting for when price comes to finally mitigate it, which we have not yet come to do, right? So important here, this is a flip zone. I like to use sometimes on the higher time frame. And you don't always have to drop down to really understand what's going on. When you see, for example, a zone like this, where you have price pull down, we leave a little wick here, candle closure here, price opens here, pushes a little bit up before pulling back down. This is a range on a lower time frame. And it's important to know that, because if you don't know how to catch that on a higher time frame, you're not really going to understand what you're looking for on the lower time frames. So while you might be new or whatever level of trading you are currently, it's important to understand that these pauses in the market or these closures and the open just before the moves on a higher time frame are ranges on lower time frames. So what that might look like, just in case you don't know, price came all the way down here, tapped, left a wick, price pulled up, left a wick, and then continued, right? And so when we see something like that, in here, all that we're basically getting is a range on a much lower time frame, because this is 4 hours, right? So on a lower time frame, you could have seen something like this, whatever. And that's important because there could be a sweep in there. There could be something that price came back to mitigate, and that's what's important. As you can see, this came to mitigate something in here. This is now the untapped supply that was mitigated into. We have this level of inducement. So we know that this origin is pretty strong. Although it didn't completely break out from the supply and it did mitigate this, it did break structural liquidity. And therefore, this move can pull back pretty aggressively, and on a lower time frame, not necessarily will we mitigate an extreme when something like that happens because we already took structural liquidity, right? Anyways, this was such a hot move. Price came down and wicked super aggressively down below. Now, if we look at this, what is this? From this low, we have what we would consider what? This is a higher, it's still lower than here. So this is a lower high, right? Price pulls down. We now have a higher low. And then what do we get? Breakout. Price pushes up pretty aggressively, right? So from here, as if we're going bullish, we have to remember that what's happening. If this was a switch to bullish, we would be protecting the lows and targeting the highs. We didn't necessarily get that. From here, after we mitigated the supply zone, what can we tell? Supply was pretty aggressive in confirming that supply is in control. That's why we got this massive wick that came down. Now, this is a weak low because we did not get what? There's no body candle closure below this zone. So when we have weak lows, that means that the high is protected. This is a strong high. And therefore, what this is telling us is supply is in control. It's very aggressive. This is a weak low. More than likely, price is going to have to bring enough orders to continue to go short. Because you can see that the buy was pretty strong into here. That's why we left no body, because buyers here were really aggressive and left a candle closure all the way up here, right? So we do have to come back to this zone. Now, aside from that, why do we have to come back to that zone? Remember, we have to justify every reaction, and we have to kind of not just predict, but we have to, let's say, figure out where price has to come to and why. Where's the liquidity, right? So we do have a weak low, which leaves us with liquidity at the bottom. This is a place that we will trade back to. Now here, this is the origin. This is a flip zone. Price does not have to trade lower than here unless it's going to continue breaking down on the bearish to create a new lower low or lowest low, right? Doesn't have to, because this is the flip. A new chain is forming here. This is considered an extreme of this move that took out that level, right? And so from here, you can tell that demand is pretty strong because this demand, once again, took structural liquidity from here, even though it mitigated something up that pushed price back down, right? So this is a pretty strong zone that we're looking at. And that's why we have it stretch out all the way here before. We're going to look at 2 more times the price came into the zone, right? So as price on here, on a lower time frame, this is creating a supply chain. The supply chain is forming and building up a lot of liquidity here on 4-hour and 15-minute time frames. You'll be able to see it in my other trade recap video. We do trade this in another video. You can see price pulls down and does what? It taps the open so light. It just barely tapped it. We didn't even get a good equilibrium or a 50% mitigation. No, we topped the top of the range and we barely touched the open, right? So I would consider this somewhat mitigated. Now, that sounds silly. Why would we say somewhat mitigated? Well, the reality is we did create a mitigation here. Although it's not necessarily completely finished, we would like to see a deeper mitigation. We don't always trust the first one, the first mitigation. Now we are on a higher time frame, and something that's important is look at the reaction we got from this somewhat mitigated flip zone. We got a very aggressive reaction that showed us very strong bullish intent for some time. We took out all the liquidity built up here. Now, what did we do? We still respected supply zones in here, right? Somewhere in here that you can see, maybe something in here on the wicks at the top, right? And so what do we have? Well, the origin here was so strong that it previously took out structural liquidity and tapped an unmitigated zone and then pushed down, swept this low. And now what did we do? We traded to what? Take this liquidity from here. This served as inducement. We somewhat mitigated, but we got a weak reaction. It's a strong reaction in a way because look how aggressive and impulsive this push up is, but it's still weak because we failed to break the high, and therefore we don't have bullish structure confirmed. So it's not like we had from this low to this high to this low to a new high. We did not get that. So there was no confirmation of bullish intention. Instead, what we got was a weak high that failed to make a new high. And therefore, what do we know? If this is a weak high, right, then what we're expecting is price will have to come back to sweep this zone, and this acts as a form of inducement for later use, whether it's now, today, tomorrow, whenever, which you will see obviously our trade for the 17th of December, which is Friday. We did sweep these levels during the sessions, and you're going to see how that plays out. But in the meantime, this is going to be inducement. Now price is further breaking down. What do we get? We get two equal highs, and this is pretty important. We have very strong further inducement to what? To sweep, because now not only do we have this weak high, but we now have equal levels, and we know that we love to sweep equal highs. So this is going to serve for later use. What do we have? Price further breaking down. Now here, what do we have? You can see that we're constantly showing bearish intention. We are making what? Lower lows, right? You can see we have one here, one here, one here, one here. We're really pushing down. Now we're building up a lot of liquidity here because what are we expecting? We're waiting for this to be swept and as inducement, and we're waiting for a deeper mitigation into the zone because we have not yet seen the potential of what the equilibrium would offer. Now, if you remember, the reason why this zone is important is because previously the origin, the extreme of this flip zone resulted in a sweep of liquidity, of structural liquidity. It swept structure, and that's very important because that shows that this is a strong level. This small, somewhat mitigated tap to the top of the range didn't really do much except take some liquidity and create a weaker level that we'd have to come back to sweep. Therefore, when we are awaiting a truly deeper mitigation, we are awaiting that this is going to be strong enough to what? To sweep the liquidity we've just built up. We have equal highs and a weak high. So we know that from here we're going to go bearish. And there's trades you could have taken from here to go long. This was a different day, different session. We're going to focus on the drop that we experienced on Friday, right? So here, what did we do? We respected demand. Now, you could consider your demand, depending on how you trade, all the way down here, right? Now, here you would have been like, oh, well, this is still a tap of the top of the range. The reason why we're not looking at it like this is because we did get a flip, and the flip is important, and it's a much smaller range that allows us to see more detail and what happened. Look at the difference if we take a look at whether we look at the whole pivot, right, versus if we looked at just the flip. This is a very strong respect of the flip zone. We did not break this, we did not violate this, we respected it. And we got a candle closure that was pretty high. We left the wick, so price very aggressively came down to the zone and very aggressively pushed up. What we get on the lower time frame is this is going to be a pivot. So whenever you see a very big wick, what you're going to see is that on the lower time frame we have a V-shaped recovery. It looks something like that. Now it's not going to look super clean necessarily like that. Depending on the time frame, it could look like this, right? It could be, that's just very aggressive, and that's going to end up leaving something that looks like a wick. And that's important because that shows us that the momentum is favoring longs, right? When we saw something like this on a lower time frame, this will be a V-shaped recovery. Now, it was a weak one, obviously, in this case, because the overall control belongs to supply in this case. But from here, we switched from, this was originally demand was in control, right? Supply was now in control, and it was pretty bearish for some time. Here we have demand in control. Demand was not strong enough to take out supply, right? Therefore, this is a weak demand high, right? Price comes back down for what? A deeper mitigation. Demand is now in control, and what happens? We sweep all the liquidity here. We take equal highs, we take the weak high, and now we have liquidation, a break of structure, and now we're going to break this down on a 15-minute time frame. Hopefully you understood what I was trying to get at with the 4-hour time frame. So now we're going to move to the 15-minute and see what happened here. So remember, this is the deeper mitigation. Let's turn off, we'll leave that so that you can get an idea of what's going on. The 15-minute. Now these are my markups for the 15-minute. Let's bring up some text so you can see what I was looking at, what I saw. Here we are. So here's what's important. Remember, we talked about a V-shaped recovery that is a result of usually that you'll see inside when we look at wicks. This is a pretty strong V-shaped recovery. So here, take a look at that. A lot of times price will come back to mitigate a V-shaped recovery because this is a great place to get some more momentum for continuations. We're not there yet. We're gonna continue looking at what happened up here, right? So here you could say this is a very corrective buildup of liquidity. Now, what did we do? We very much respected the lows and we targeted the highs. Each time this was a high, price here created a very rounded accumulation. Whenever we see very rounded accumulations or buildups of liquidity, you know that this is a lower time frame accumulation. More than likely, if you know the way that we're doing this is very corrective. We're not violating any areas, and therefore we're leaving a lot of unmitigated zones that later will become targets or potentials for pullbacks. You'll notice that a lot of times we get something that pulls back here that could provide us another entry potentially, right? Look at how clean that is. You know, obviously this is getting ahead of ourselves a little bit, and there's more videos about this, but you can see how price reacts to these zones and creates a flip opportunity. Another potential for an opportunity for another entry here, right? Now we're getting ahead of ourselves with that. So let's stick to this. When we see this buildup of liquidity, you have to think about yourself, what are we inducing, right? And so we're inducing something here that, once again, like we saw earlier, equal highs, weak high, we targeted these for what? For this aggressive push up. This was inducement to be served that we were going to take with this mitigation. So you can see what price is going to do based on the liquidity that's being left behind. What are we inducing, right? What are we waiting for? So in this case, this inducement tells me that we have a lot of liquidity built up at the bottom, and we could see very aggressive shorts. I have 1, 2, 3 zones that I'm really looking at. This is a sweep on a lower time frame, I believe a 5-minute that we'll look at. We see this very aggressive push up. You can see here we took out this high. Price pushed up very aggressively and very impulsively, right? Price pulls back. We create this accumulation here. Take out that high, right? This is the low. This is a new high. What do we have? We have 2 points of interests here. Now remember what I mentioned, that on any time frame, on a higher time frame, medium time frame, whatever, you don't always have to go down and drop lower to see where we have order blocks or where we have hidden demand and supply zones. A lot of times it is between the candle closures. Look at this. And you're going to see this on a lower time frame, but look at how perfect this looks in here. This is a pause in the market where price paused, left behind a little wick, had a little push back up, opened, pushed up, and then what? Continued back down. So this is going to create some sort of pause in the market where we had some sort of range happening on a lower time frame that we could be looking at before we had a continuation downward. Whatever it looks like on a lower time frame, we know that it's in this area, right? So let's see, what do we have here? Okay, so we have 2 zones. We have an extreme, and one way you could have said, well, you know, we want to, you know, check out this entire candle here. Now this would have been kind of too big of a zone, in my opinion, for a 15-minute, and that's why I broke it down. Let's see how big this is. This is about like 25 pips or so. So this was too big of a zone for me to pay attention to. That's why I tried to narrow it down. Here you can see that around the 50% of this entire candle, we have the pause in the market. So whenever you're looking at setups, just try to see if you can refine it down. On a lower time frame, it would be more clear, and you're going to see it on the lower time frame. But at the same time, just to keep in mind, if we frame this whole candle up just to 50%. Here's the 50%. And so remember the equilibrium of this sponsored candle. This is where we had that pause in the market. So that's just further confluence, more things that are connecting with each other to tell us the story of why that's a relevant zone. Now remember, sponsored candles, I don't know if I've talked about this in another video, it's a very aggressive candle that's full-bodied closure and sweeps liquidity. These are always going to come back to serve as mitigations, great mitigations. And a lot of times, if this results in a break in structure, which in this case it did not, usually these will be great places for re-entries, right? In this case, we didn't get that because we're building up liquidity. We had news this day, so we had news for Europe, and then we also had news for New York later in the trading session that just continued this short. But we're basically building up liquidity for the news, right? So we had two. We had this initial decisional, which to me was pretty relevant because we did get a sweep in here. So you can see how this middle candle swept the previous candle, right? And so we did take liquidity. So this is a good liquidity point of interest that I'm looking at for potential shorts, as well as the extreme. That's also a 50%. So it's a lower time frame supply and order block. That one's the most important to me. That's the one I'm really looking at. And so let's break down what happened in the supply. 1 second. All right, so we're talking about this decisional supply zone. Now, some people may have been looking for a trade in here. Some people would have been either looking for some sort of reversal. In this case, let's take a look at this. We do not yet have bearish intentions. We are protecting the lows, targeting the high. Now we have this very strong impulsive push up that swept liquidity, pulled back down, but did not take anything out. And therefore, this is a little bit more of a complicated thing that we're looking for. So in this case, we are looking for a change of character on a lower time frame or a flip to happen somewhere within these zones, because these are important zones that took liquidity or that are responsible for takes of liquidity that happened from momentum or from orders that were injected in these places, right? Now, if we take a look at this, here we're very quickly invalidate this supply zone. Here on a lower time frame, let's drop down to 5-minute. On a 5-minute time frame, we can quickly see that we wicked out of the supply zone. So what I would have been doing is I would have been waiting for, I'm like, okay, here we got a sweep that took out liquidity here. So this is important to me. We had a sweep. And that sweep, liquidity point of interest, I'd be looking potentially for a buy at this zone if price came back into here for some sort of buys, right? So from here we have a demand. Demand was in control here. Price comes up into the supply zone. Now I'm looking to see, is demand going to hold strong and invalidate the supply, or is supply going to take control and now be in charge, right? And for that, we would like to see supply hold. Very quickly, supply is invalidated right here. If you can't see it, let's zoom in a little bit. You see this? We wicked just above it. So in that case, we swept this supply zone. So now that we have not respected this decisional is invalidated from right here, right? Now the question is, did we get a flip? A flip zone would have looked like what? We would have had price pull in, we would have had a reaction that swept liquidity, and then we would have had that reaction or this extreme would have invalidated the supply zone. Then what we would have looked for is the mitigation back into the extreme to continue the way up. We didn't get that. Price very quickly from here pushed up and immediately invalidated this supply, which shows us that it really wasn't that strong to begin with. So what can we expect? Well, this is the origin or the last push up into this move that actually was responsible for invalidating it. This could have been a pretty good decision. This could have been a pretty good entry for buys, right? You could have taken a pretty nice buy here, which we did not do because this was not yet where I was trading in the market. I came to the market that day around midnight, and I'm going to show you my trade. Now, of course, if this supply is taken, right, and demand is in control, what are we expecting? Price will have to come back to this supply zone because this supply failed and demand is still in control. So we're still trying to make new highs. So this would have been a pretty good 1 to 8.88, 1 to 9 kind of trade. Would have been great. Sub 3 pip stop loss 2.6 would have been a pretty good setup. You could have targeted the 50%. That would have been a good trade, but once again, I did not take that because that's not my session that I'm trading. So at this point, demand is still in control. We now came back to mitigate this. This is the source for the break, and now what do we get from here? Price makes a new high on this is internal structure, right? So what did we do? We break structure internally, yet we do not yet break swing structure. The swing structure's respected. Now remember I was talking about what happens in the middle, in the pause of these candles. This zone where two candles come to connect and we get a continuation on a 5-minute time frame. Look what it looks like. Look at that. Price here creates a lower time frame range, pushes down. So here, what are we doing? Each candle trades lower than the previous, right? So we're continuing bearish. We don't get any sweeps in here, right? And so what is likely going to happen? Well, we're going to get some sort of reaction to here. We don't know if we're going to react to something higher up or into this zone. We're going to see. That's what we're waiting for. Price comes in. This happens at around, what time is it? 22 is what, 10 p.m.? At 10 p.m., pretty much exactly, price comes in, taps, and reverses. What do we get? This is a pretty strong candle body closure, very small wicks, looks like a sponsored candle, and what do we get? A very aggressive push back down. And what happens here? Here's what's important. Remember what we were talking about, protected lows and targeted lows or targeted highs? In this case, the lows were protected, none of them were violated, and the highs were targeted and they were violated, right? So in this case, if we are keeping bearish structure, bearish momentum, bearish order, I'm switching up the words. If we're keeping bullish order flow, bullish momentum, bullish structure, the lows will have to be protected, the highs will be targeted. We're going to make new highs if we're bullish, right? If we're bearish, we're going to make new lows. So at this point, this was a pretty important demand zone that got violated. Here, this was the origin that broke a supply zone. So we know this is a pretty important area. There's a lot of orders here, that enough so that we had one quick impulse just break the supply zone that was decisional. We had a mitigation of this demand zone that created a new high, right? But here's the question. Up until this point, demand is still in control. Demand was in control here. Demand was in control here. We're making new highs. Demand was in control here. Invalidated supply. Demand is still in control. Demand was in control here. Pushed up, broke this high. But once we pulled back and we did not violate this supply, now supply is in control because supply has the upper hand. We are respecting supply. Supply is respected, strong lower high, and we broke structure below. This is a lower time frame supply and order block on a much smaller time frame. So that's important. Once we get this candle breaking the demand zones, what do we have? Supply is now in control. We have a shift in order flow. Expected order flow went from bullish to bearish. From bullish to bearish. So then what do we have? We have this. Let's mark this up a little bit here. What is this? This was a demand zone. This was the area where we broke structure and then we had to pull back up. Let's just turn this into demand because it's marked as supply. Price pushes up and what? We failed to make a new high. And this is where I get my entry. Let's take a look now at 1 minute. see, turn off 15 minutes. We'll leave 15 minute. Perfect. And then we're not going to do that yet. So here we're. So let's go down from the 5 minute to the 1 minute. So remember what we just did is we had a change of character. I'm going to show you what that looks like. Now we're going to the 1 minute. And the reason why we're going to the 1 minute is because on the 15 minute and on the 5 minute, we basically just respected supply and we just broke demand. So now we have a change of hands from bullish to bearish. And so now we're looking for a potential setup. In this case, if we go to the lower time frame here on the 1 minute, here's what we can see. Just before price came into this supply, what do we see? This was the area at where we built up liquidity. This was the push up. Here we had this low. Here we broke this high right here on the 1 minute time frame. Price pushed down, created what? Equal lows. We are inducing liquidity here. Why are we creating equal lows at this demand zone when we're expecting bullish intention? So this is already creating liquidity, foreshadowing that we are going to have some sort of pullback to come back to take out this liquidity, right? Now remember, this is a pretty small zone. Price passed the 50%. We went through the equilibrium. What happens? This was the area that originally pushed here and here that created this push up into the supply. And therefore, as long as this holds, we are still going to be bullish. What happens is when price very aggressively overturns and starts pushing back down, what do we get? We get a bounce from here, which basically we're creating a flip, a lower time frame flip. So what happens here, let's mark this properly, demand flip. So we get a flip, and this is also what? A V-shaped recovery. On a lower time frame, this would look like potentially a wick, or a higher time frame would look like a wick, right? So we have a very aggressive V-shaped recovery. Price came, tapped into this demand, made an extreme, and then what? Rolled over and created a demand failure and just continued down. So what do we have? This is the, as we mark flips, the point of interest reaction. We formed an extreme. Let's do like this, right? This is the extreme. We have failure of the point of interest, which happened here, right? That violated the structure. We took liquidity from here. And then what do we get? We're getting continuation downward. We're continuing to push down. We broke the demand. At this point, this is the first sign at which we're changing hands on a lower time frame, right? Now on a higher time frame, remember, when would you have, if you were looking at the 5 minute or the 15 minute, when would you have seen that we could have the likelihood to go short? Once this happened on a 5 minute or 15 minute, you would have been like, okay, we could be looking for shorts now because we respected supply and we just took out demand. But if you were on a 1 minute time frame, you would have gotten that signal much faster. And that's why it's important to understand what's happening on lower time frames, right? This is during the time where I'm starting to be on the charts and I will look for my setups. Once this is happening, I'm looking for price to come in here to give me a potential opportunity. And look at that. It really does. That's exactly how it works. On a lower time frame, this is the 1 minute. But look, this is a half a pip zone or range where you could have basically got an entry with a half a pip, right? Now here, what do we have? We have a pretty, impulsive push up on a wick that probably came to mitigate something here in the seconds time frame. Did we sweep? Maybe we swept something in here. This candle does trade higher and lows here. So this is a push up and push down. This is basically what you would say is the origin of the push that gave us the reaction. So price, this was important. Had price traded straight through this, this would have been the point of interest. But because we did get a point of interest reaction and we formed the extreme that created the failure, our interest is going to be the extreme right here. right? And on a lower time frame, like let's say the seconds, you can see this very clearly too. But look, what do we get? We get push up, we get an inside bar. This candle sweeps the lows. This candle swept the high of this candle. So here we're getting a very aggressive sweep of the lows, a sweep of the highs, and then when we get the actual break, this is where we officially break. You can see how we stuck below here. Even if it's very small, we're talking about 0.1 pips, a tenth of a pip. It's still showing us that we're breaking down. When we start to see the prices continuing to break down, that's when we're really looking for shorts. Now here's the thing, you might want higher time frame confirmation. For me, this could be potential entry somewhere in here, and you could take something here. Now the thing is, we don't have to necessarily mitigate this V-shaped recovery because we had a flip. We got the change of character and we got a flip here. So this would be where I'd be looking to enter. For me, this is my extreme. I'm not paying attention to anything here because it no longer needs to be mitigated, right? And we also had inducement. We took liquidity from here to create this level. Now, when you get further confirmation on the 15-minute and the 5-minute, you get this creation of this demand zone. We took out previous demand. Now we're looking to see how this holds up. But on a 1-minute time frame, when we're here, this is what we're looking at. We're looking at how price is going to interact with this flip zone, right, that created a change of character. So price trades up very impulsively, very aggressively into this. We make this high, price pushes down, makes this low, and then what do we get? This low creates what? A new high. But this new high mitigates and respects the supply zone. The moment that you see that happening, this tells us what? Supply is in control. We potentially will have a change of character. We're expecting what? If this low goes, we are entering at the extreme, right? That's what we're looking for. So when price from this demand pushes up, this high, this low, this high, if we are going to keep bullish, then what we have to do is we have to violate the supply and we have to protect the lows and target the highs. Once the low is violated and the supply is respected, we have confirmation that we are going short. And that's what happens here. Price pushes down, we create some sort of distribution on a lower time frame here, and price violates the low. We break this that was supposed to be protected. We've confirmed that we respect the supply, and now we are looking for an entry at this equilibrium. You're not looking for something super small in here. You can take the whole range. We're going to take that whole range, and you're going to look for a trade at the equilibrium. Now, while my trade would have been like this, and I would have very confidently gotten a sub 2 pip stop, I traded, this was a at market trade, this was not a limit. I was waiting for a reaction in here. When price pushed in here, pulled back, I saw this, and then I got my entry somewhere in here. So mine was a little bit bigger. I also wanted to cover this because we did have some equal highs in here. So I wanted to make sure that I was 100% confident in this. It's not worth it to cut my stop loss by, let's say, 1 pip for the sake of just having a, pretty crazy trade that I could look at, with instead of 20R, it could have been like 30R or whatever. I just wanted to be in this, right? And so this is what my trade looked like. My entry was right here. I set it and I was right in here. I traded it live. Once we got the pullback, price pushed back up. This was a 3.1 pip stop. You can see how this pretty much covers everything accurately. This was an entry, it looks like at the 25%, and I covered the highs of this range by just about 0.7 pips, which is pretty big. I could have cut that out of my trade, but I wanted to be safe, play it safe. Now what happens here? How do we manage our trade? We're officially short. We respected a 1-minute flip zone that was responsible for violating 15-minute, 5-minute demand zone that we broke. We've respected that. We've gone a 1-minute change of character. We've mitigated the equilibrium of the range responsible for breaking and creating a 1 minute change of character. We are now awaiting for this low to be broken. Once we break this low, our trade goes to break even. So for the duration of our trade, the moment we get into this trade, it's right here, price takes us into drawdown by 1.6 pips for about 43 minutes. We're in this trade, we're hovering around. Once from our entry we get to about what, 9 pips. After 9 pips we're running risk free. So for 45 minutes price is pushing down here, we're building up some liquidity to take. Price violates. At this point we're now break even. So now this trade is running risk free 100%. There's no risk in that trade. We will just come back to break even. And what do we get? Most of the time when we get trades like this, price never has to come back. We're already mitigated. Now let's figure this out. What do we have? We have a lot of areas for potential pullbacks, a lot of areas for re-entries. This was what? We took liquidity with this one, so this is a liquidity point of interest. This is something that we could have traded. We could have very easily gone an entry here with a sub probably half pip stop. How big is this? Oh, this is a 1.2 pip stop that you could have gone. This could have been a beautiful re-entry. This one was responsible for what? Breaking this demand zone, and therefore this was the extreme. Price came back to mitigate it. We tapped it twice. Beautiful entry. You could have had another trade with another break even risk free from here. Price never came back. How did I set my take profit? Well, if we look at the higher time frame, let's go to the 4 hour, sorry. On the 4 hour, whoops, turn my video on. How do I do that? There we go. Sorry about that. I don't know how to hide this. Anyways, if we're looking at the 4 hour, what do we have? We had an aggressive, deeper mitigation that created a break of structure. We swept the highs, right? And what do we have? Price, we had a very aggressive V-shaped recovery here on a 15-minute time frame, right? And we have unmitigated 15-minute demand zone. What are we going to do? We could mitigate the 50%, which oftentimes is what happens from that high to this low. Look at that. Price came perfectly to this level. Now, had I held the trade up until this equilibrium, this trade would have been a 1 to 32, and almost 100 pips. Would have been amazing with a 3 pip stop loss. Now, obviously, that's not where I set my take profit. I set my take profit just below where I saw all this buildup of liquidity. So, because we had a very corrective buildup to the news, I knew that we were going to have to come back to take out that level. And so I could expect that this was going to be the extreme, even though we had 4 hour structured or 4 hour unmitigated supply zone that I really was waiting for price to tap. When I got the signal here based on a 15-minute demand violation, we got a 1 minute change of character, a respect of a supply zone. We had a mitigation of a 1 minute flip zone. That was all, and we had the confirmation of a change of character after the supply zone of the 1 minute held. All of that was pretty important, and all of that was vital to us being able to take a short from here, right? And so I saw the buildup of liquidity here, and I wanted to sweep this level, and this level. Now, once again, if we drag these across, all of these could have provided great pullbacks for us to get further entries. Now, remember, we're not necessarily looking to respect all these demand levels just because they were responsible and they're unmitigated for breaking structure, right? If we're changing character, these are going to serve as pools of liquidity that we're going to wipe out on the way down, right? So if we look at it on a 5-minute time frame, what do we have? This first zone, price came in, and what do we get? A flip. Now, did we come back to mitigate it? On this time frame, we did not, right? Price came in, point of interest, reaction, form extreme, and then what? Failure. So, although we didn't get one from here, this would have been a great place to look for re-entries. What do we have? This was another one. Price came down, tapped, point of interest, reaction, formation of an extreme, break of the demand zone, so failure. This would have been another place to look for potential entry. Right here, what did we get? Price somewhere in here tapped, pushed up, continued back down. Here, maybe we wouldn't have found anything. Price pretty quickly reacted to this zone. But here we did have potential ways to find flips. They didn't come back with entries, but nonetheless, it's important to understand the importance of unmitigated zones that we can use that were, let's say, important for building structure in the past. We could use them as flip zones for re-entries, right? And so when this trade was taking place, we're already break even from here. We would have had a beautiful re-entry here with a 1.5 pip stop loss. Price continued down. We tapped, pushed up, we flipped. Let's lock this so I don't drag it by accident. We were just following this all the way down. Each time the price reacts, we have a little pullback. Let's see. How big are these pullbacks? About 13 pips. That's great. And then we continue downward. So at none of these points did we change our character, did we break structure that was important. We did not violate any supply zones, and that's what's important. Here in this case, the only way we would have exited our trade is if we violated a supply zone. All of these are untapped or respected. If we got, for example, let's say price here comes down from here and then it violates the supply zone, if it's not a sweep, that's already telling me that we could be switching hands once again, right? We could be switching to bullish order flow, but we don't get that. And it's because supply continuously is respected and holds and stays unmitigated, we have no reason to change hands, even here. Potentially here, some people may have gone out. Had we looked at it here on the 1 minute time frame, you would have seen that we have this supply zone. Price comes down here. What do we have? This one was responsible. That's the most low. Right here, what do we have? This was the one that created the push down. Let's do this. We do get a change of character, right? This is a change of character, and some people would have been looking for buys, right? Some people would have been looking for this to be a buy area to take price all the way back up. But what did we not get? We didn't violate any of the supplies that were ahead. So I would have waited for further confirmation. At the same time, there's no demand zone that we're reacting to that's important, that's relevant for us to even pay attention to this area. Remember, we're not going to be paying attention to every single 1 minute point of interest. Because every time that you highlight a point of interest, whether it's demand or it's supply, 1 minute, you're going to be very confused about all of them. I could have drawn 100 more lines here. I'm only focusing on 15-minute demand zones because those are the only ones really relevant. Here, we did get some. Here, you could have been looking for something, right? But the reality is, why would we look for anything here, which is where we got that reaction to, if we have this imbalance here and we have so much further that we could move down? I mean, we still have to mitigate the equilibrium. The 15-minute isn't until here. So the extreme of the 15 minutes here. We're not interested in a flip so early on here when we have yet to come to the extreme in this case. And I wouldn't consider this the decisional. At the same time, we don't have any internal structure here. So this is just a pretty empty zone. Price was so quickly traveled through here. So because there's no structure in here that we induced, very likely price will have to come into something in here, right? And so in my case, to be safe, because it was Friday, I also didn't know how aggressive the market was going to be. I just wanted to take my profit at the top of the range from this V-shaped recovery. For me, that was safe. And the moment it hit here, I'm out of the trade. I'm done. I was asleep. I slept until probably 10:30 today. So I wasn't even awake for this to happen. Price continued. Of course, I wish that I had kept my trade going and I could have capitalized on the extra 22 pips. Would have been great. But nonetheless, 22, 24 hours, pretty amazing for a single day. Once again, I just wanted to review this really quickly. This, you could have seen this as a reaction. We did get a lower time frame change of character. We had this unmitigated. We could have seen this as a buildup of liquidity that we could later sweep to tap and push up. I would not have taken this trade because obviously I was still looking for deeper mitigations myself. But something that you could have easily done to prevent you from getting out of that is you could have waited for a stronger supply zone to have failed. So instead of just taking something here because you just wanted to get in and immediately get taken out when price comes into here, I would have waited for price to violate the supply zone and either give me the change of character there or a flip. You know, I could have waited for that violation, or I could have gone a flip entry where we have what? Price comes in, reacts, forms an extreme that sweeps liquidity, creates point of failure, and then mitigates and then continues. And we could have looked for something like that. That did not happen. And so I had no indication to take a long from here. You could have avoided that loss and just continued to ride this trade all the way down. We came back, tapped what? We tapped the equilibrium, and now what do we have? Price is just on the close, the last minute of the close, price pushed up, a little bit impulsive. What are we going to look for next week when the market opens? Are we going to respect supply zones? Are we going to hold demand? What's going to happen here? This is now potential demand. Are we going to break to the upside aggressively, take out supply zones, come back to respect demand? If we respect demand and violate supply zones, I'm now looking to take an entry to go long here, right? So all that's going to be for next week. Let's see what happens. But that was a beautiful trade recap, 24R, Friday, London entry. Once again, pretty important trade, pretty crazy. We, on the 5-minute, 15-minute, what did we do? We came in, we respected a supply zone. We had a demand failure, so we broke demand, right? We came back, we saw a V-shaped recovery on this respect of the supply zone. We had a V-shaped recovery, we had a change of character, and we had a flip. That flip was later respected, right? We got a change of character as a result of price mitigating the flip, indicated that we're going to go short, gave us a beautiful entry. Perfect, simple textbook analysis. Of course, it's important to pay attention to lower time frame, because had you been focusing on the 5-minute or the 15-minute, you would have been waiting for price to come to mitigate probably something in here like this, and you simply just would have not had a nice trade, right? Remember, it's important to look at different time frames too, because on the 30-minute, we did mitigate it, right? But, you know, on the 15-minute, we would have been looking at this zone. That one did come in. What else? On the 10-minute, we did come in. The 5-minute, we would not have tapped it. So take a look at all your time frames. It's important to build a higher time frame story. Understand what the higher time frame is telling you. What structure is. Structure is always king. Pay attention for when we start to break structure. What are we changing hands? What are we signaling? I hope you learned a lot in this video. I hope you have something to take from it. Thanks for watching once again, and have a beautiful weekend, and hopefully I see you for the next trade recap.